Good morning, ladies and gentlemen. Welcome to the first day of the FPFX EXPO International 2025. You are here with me, Jatasini. I'll be your host for today at the Idea Hub, the playground of innovation. Today we will discuss the talk of the town of the industry, such as fintech startup, risk management, future and CFDs, social tradings, and more. Let's begin our first day with passing the challenge, what's next for the prop trading boom. Please meet our speakers and moderator, Lien, co-founder of bktraders.com. They will discuss the direction of the fast-moving sector on the second half of this year. If we are ready, please give them a big round of applause.
Thank you, everyone, for joining us this morning. I am so delighted to be invited by FPFX to host this panel on what is truly the fastest growing part of our businesses. And it's probably, an energy that we haven't seen in the marketplace in probably over a decade. Now, the prop trading industry has gone from niche to mainstream in just the past few years, thanks in large part to some of these gentlemen that you see here. And what has brought for us is a brand new wave of entrance into the market. And this new wave of entrance is something that has gotten everyone excited because a lot of them haven't traded before and they're learning about trading for the very first time. And I personally, and I think you all agree, have not seen this type of energy since the beginning of the Forex retail CFD boom. So it's really exciting times to be a part of the prop space. But as the model matures, so does the demand for risk management, technology, as well as regulation. So FPFX has brought here some of the leaders in the prop trading space to share with you their thoughts on how the industry will look over the next few years. So with that, I am delighted to introduce to you Petros from FunderPro, who's the Chief Strategy Officer, Justin from FPFX, the CEO, and Marek, the CTO of FTMO. Let's give them a round of applause and welcome them to the stage. Now, first, I'd like to give you guys a few moments to talk about your history and your company, and to share with the audience your background.
Thank you, Kathy. It's so nice to be here again. As we see every single year, the topic is becoming more and more interesting, more and more crowded, which is very good. So I'm Petros. I represent FunderPro as a Chief Strategy Officer. For those who are not aware, FunderPro has two arms of stream. So we have a direct consumer place that we are running our own prop on, offering CFDs and futures. And at the same time, the technology that we also use is being provided as a software as a service. So it's a commonly white label solutions for those who want to start their own prop. We will have a third stream quite soon. We expect to announce things by the end of this week on this event. So please stay with us. I'm very happy to be here with the gentlemen, and I'm very sure we have very, very interesting things to say based on the questions that we have.
Okay, great. Thank you for the opportunity. Great to see you again, and great to speak in front of everyone. Justin Hertzberg, founder and CEO of FPFX Tech. We're the first and largest SaaS technology provider in the prop space. Currently, we license our technology to over 100 prop firms, and we also have, through a sister company called propaccount.com, a white labeled solution where we use our own technology but deliver a fully branded solution to those that are looking for more of a lightweight option to really just focus more on branding and business development. And as Petros said, very excited to have this conversation, to share some ideas, to take questions, and hear about what's happening in the space and discuss it openly, as it is rapidly emerging and evolving in a very exciting and sometimes challenging way. But it's a really exciting time to be involved in emerging spaces.
Hi, everyone. Marek, CTO and co-founder of FTMO. I will go a little bit more in the past. Like 15, 16 years ago, I started learning about price action with the book by Lien. So it's great to be on the panel with her. It's an honor. And Then a few years later, me with my co-founder Otakar, we were thinking about how to set up some kind of a business in trading. And we came up with this idea of prop trading. Back then, it was actually the first time we heard the term challenge, which is now pretty common. Everybody's talking about challenges, evaluations. But let's say that it was not actually our idea, but we were, let's say, in the very beginnings, and I believe that FTMO is taken as a pioneer of this industry. Back then, on these expos, nobody understand what does it mean prop trading. We were asking tech providers, there were actually no tech providers like Justin is right now. We were asking about technologies, how to actually make this idea possible. We had to actually start coding on our own to make it possible. And now, fast forward, we have IFX Expo conference with multiple sessions on topic of prop firms. There is millions of traders around the world using prop firms now, and I believe that for quite of them it can be life-changing how to actually make money from simulated trading. So yeah, sorry for this longer introduction, but I believe that as FTMO we have something to say.
I think the amount of people in this room shows how much interest there is in prop in general. Now, the slope of the trajectory of the prop trading industry has been significant in the past 3 years. So I want to ask, and maybe I'll start with Marek, how has your operations and technology changed in order to manage this and effectively scale the way that you've scaled, as well as to meet the demands of traders as they're changing and they're entering the market?
Yeah, I have to say that with FTMO it was a crazy ride. I remember we had 5 clients. I was doing our calculation with Excel sheets and first databases and so on. Now we are monitoring more than 200,000 accounts, real-time trading. We're providing them data, tick-based data in their dashboards. FTMO is having around 300 people right now. So it's not anymore a fun student project of 4 guys. It's a serious business. And to be able to make it all the scale, the growth and innovations and so on, I think that the key part was to build the strong team, and this is where I see the biggest change from the beginning, right? Because back then, me and Otakar, we were doing everything, and now we have legal and compliance, we have finance team, we have risk managers and traders and so on. So I think that we matured pretty good, and I believe that this can hopefully be also said for the industry itself.
So Justin, you have a unique position where your firm basically helps the infrastructure for a lot of these prop firms. So you've seen the growth of these prop firms, and not just one. I know Marek is one prop firm, but you've seen the growth of many different ones. What's the commonality in how they have changed operationally and technically to scale?
That's a loaded question because we do service so many different firms. They really span the entire spectrum. So you have a lot of small opportunistic thinkers that are really just looking at it as a branding exercise. Hey, I've got some social influence. I can market to them. I can monetize those relationships. And then you have others that are really thinking enterprise value. They're looking to build something concrete and strong that's built for years. And so we had to build our technology and deliver a solution that had a very, very strong foundation that could be stress tested and could scale as quickly as the fastest growing prop firm could scale. And I think like Marek, we 5 years ago, we went through some of those growing pains and you realize, okay, this isn't just a small project and you have to really think big and you have to invest early into what you're delivering so that you can layer on all of the customization and the new features and functionalities that firms want. And you can't just sort of patch it together with, Scotch tape and glue. It has to be something that's robust enough to support all of the customizations and unique workflows and experiences that both the operators of a prop firm want to have in terms of the administration of how they run their business, but also the customer experience on the front end.
So Petros, would you say that diversification, you talked about how your business line has now increased to 3 different business lines. Is diversification one of your ways of matching the scale that you see in the growth in your business?
Yeah, absolutely. At the end of the day, you need to start with the client, but as the guy said, is that the audience is mature, right? So they demand more. They are more skeptical who they should choose. There are many companies that popping up, and after 1, 2, 3, 5, 6 months they vanish. So like technology has to be there, people have to be there, customer-centric logic has to be there. So what we have seen in FunderPro was like we started our own prop, and then we realized that in order to have things that we would like, we can maybe create them ourselves, and that can actually be a little bit faster. So diversifying the portfolio, I think it's a strategy which is going to take you a little bit further, and it has to be done in a way that it's going to be concrete and it should last for a couple of years ahead.
So you said something very interesting, which is that the sophistication level of the trader has changed. And I know for some people in this room, prop is still very new. And it's only in the last 12 to 18 months that we've seen this growth and the sophistication of the traders who are using things like automation, data analysis, statistical arbitrage in order to pass their challenges and get payouts. So how are firms, and maybe you can start with the answer, how is your firm trying to stay ahead of that? It's trying to stay ahead of these traders that are trying to use technology to take advantage of the challenges?
Sometimes it's a constant battle. There are cases that they are a little bit faster than us, and then we need to catch up, and vice versa. We believe that, as Marek said, that nobody can work in an Excel file anymore, right? And depending on the complexity of your daily operations, things can become quite uncomfortable if you don't automate things. So automation and AI, machine learning, whatever you call it, is a key factor, right? Risk management is actually a must, right? Especially nowadays, because the level of trading and unfortunately also the level of potential penetration to your system is actually a little bit more sophisticated. So automation is one thing, right? Constantly training the staff is a second thing, and I think these two are a pillar for success.
So Justin, how are you advising your customers, the firms you're working with, to manage this change?
So I think risk management is absolutely paramount in the space. We've seen over the last few years a lot of new entrants in the tech side of saying, oh, we can build a prop CRM and we can facilitate your business. But it's a lightweight solution that really just does basic functions. There's no intelligence behind it. There's no people with intelligence behind it. And risk management is really the biggest driver of success or failure when it comes to prop firms these days. And it does require teams, it does require systems, it requires automation, it requires the ability to real-time monitor every trader and every trade that's happening. And when you talk about the sophistication of the trader, it's not that the traders are becoming more sophisticated. About 99% of all the traders are just your regular high-integrity retail traders, the same ones that have been opening self-funded brokerage accounts for the last 2 decades. But you do have that 1-2% that are what I would consider to be toxic or predatory. They're the ones that are simply looking to game the outcomes of the system. And they're the ones that could easily take a profitable business and turn it upside down if you're not properly monitoring those risks. And so you have to be vigilant for that. And that requires everything from looking at the challenge structure that itself when you actually go to market, and then it requires that real-time monitoring. And then you have to have policies and procedures in place for how you as a firm are going to deal with that. How do you put away net capital reserves to cover those rainy day events, and what is your policy for dealing with people who are clearly violating either the terms and conditions or the spirit of the program that you're trying to offer?
So I'm very interested in your answer, Mark. How is FTMO managing the higher sophistication of, maybe it's a small pocket of traders, maybe it's a growing pocket of traders?
Yeah, I think that important to mention is that, and I'm glad that this is moving, I think that maybe several years ago, prop trading was taken like some kind of marketing activity only. But it's a serious business, and you need to have serious functions and some kind of professionalism. I would say that 12 or 18 months is not that big change for FTMO, because we are here for 10 years. We take the business seriously, so it's like no surprise. it's actually great that traders are getting more and more educated and sophisticated. I believe that all of it is how the data and technology is accessible now, right? You don't need to wait for your yesterday's report. You have everything real time today. So I think it's important, definitely the technology and the people behind. But I think it really depends whether the company takes it seriously and, conducting the business properly with all the functions and all the stuff behind. It's not just about making content on Instagram.
So you talked about how, in terms of the trader themselves, they are demanding more. So what are you seeing that these traders who are, there's so many prop firms in the space, what are they asking for the most from the prop firms? What are they, what kind of features do they want to see?
Yeah, if I can start, I believe that, the most what people demand is some kind of a trust, reliability. That if I get into it and I'm working hard on my reward one day, I will definitely receive the reward, and if possible, as soon as possible. Right? Just recently released a new feature where you get an instant payout. You basically click process payout, and with Visa Direct and MasterCard money sent, you literally on that click you receive it on the bank account through the credit card. That's a pretty cool feature. You don't need to wait anymore for wire transfers and so on. So I would say that it's, reliability that the company is, let's say, fit and proper, and you can, get delivered what you're expecting.
And so, Justin, what do you see traders demanding for in terms of transparency, execution?
Yeah, I agree with a lot of what he just said. I think you're starting to see traders become a bit more sophisticated in terms of counterparty risk. A lot of them have been burned by firms that had no money, had no risk management solutions, thought this was an easy win, and then realized they were, running an insolvent business and disappeared overnight. And so you do see traders looking for trust. I think that's a great thing. I think the firms that are represented on this panel are doing a great job of building and reinforcing that trust. But in terms of other requests that we're seeing now, there's definitely a push towards multi-asset. So what started largely in FX and CFDs is now on exchange futures, it's on exchange crypto. You're starting to see some new avenues in equities and sports and really anything that can be sort of gamified in a trading experience is part of the demand. You're also seeing demand now for more diversified trading platform availability as well. So there's a lot of those things going on. You have to kind of prioritize as a firm what you can do and what you take on first and foremost. But the feedback that we're getting from operators and end users is largely constructive. It used to be around, can I have 1,001 leverage, or can't you just make the drawdown levels this? But now they realize that the structure of the program is what the structure of the program is, but now it's more about the user experience and how they get to engage with you.
So I just have a follow-up question on that before I give you a chance to answer. As you mentioned counterparty risk, so you are also incubating new prop firms. So how do you advise new prop firms to manage that counterparty risk publicly and create that credibility publicly?
That's a good question. Nothing that you can do from a new entrant that doesn't have any pre-existing relationship in the market, right? You still have people coming into prop trading that haven't really been in any form of regulated financial service before, and so this is their first interaction with the end consumer in that capacity. The place that we start is sustainable programs. If you're going to launch a business that's unsustainable, we don't even want to invest our time and resources into it from a tech standpoint. And so we try to help firms understand expected passage rates, payout rates, average payout amounts before they even open their doors, so that they can understand, from a risk exposure, do they have enough capital? Is this the type of business they want, the type of risk that they're going to have? Are they going to be able to sleep at night through running this business? Because we want to make sure that they're positioned for success and make sure that they can deliver on their promises to their customers, because you break that trust, it's very, very hard to get it back.
So is this also a consistent theme that you see with what traders are demanding?
Yeah, it's actually, the number one thing is that they need to make sure that they will get payment. They need to make sure that they will get the reward. As Marek mentioned, sometimes you have to do exactly what you said you will do, right? So if, like in FunderPro, we have a daily reward, so we allow the user to claim his reward on a daily basis. So there are cases that we are, after the click of the button, it took us about an hour, and then they already starting chatting, okay, why I didn't get my money? And then you need to explain to him that 1 hour is not a delay, but so, if you say something, you have to do it, okay? They need to see the trust, they need to understand that the company is there and they will pay me, as Mark said, that I will put all this effort, will I be paid? Then, as Justin mentioned, we see the second level of sophistication. So they are asking for tighter spreads, better execution, multi-asset offering. So they are becoming more and more demanding, and they are becoming more and more sophisticated. But I think the number one thing, if we could put one, is trust.
So in light of all of this, how has your funding challenges or trader evaluation process changed in order to adapt to this?
It has significantly changed. Okay, I mean, in FunderPro, from the first day, we had this mentality of rewarding people on the same day if possible, even though it was creating sometimes a very big headache in the operation side, because a lot of people had to work and a lot of buttons had to be created. We stick to it, so it had to be adjusted. Technology played a huge part of it. Now things are becoming a little bit not easier, but smoother, right? We don't have Excel files anymore. We have buttons to click. So you have to adapt. You have to evolve.
And so how have you seen, and there's been new challenges, new types of challenges being introduced on a regular basis. How have you seen the process evolve and change?
I think with the rise of some of the toxic trading that we've seen develop and enhance over the last 4 or 5 years, you've definitely seen an evolution in the types of challenges that are offered, as well as the conditions and the metrics by which traders are qualified and passed through to a funded account environment. But it's always just about balance. You have to have a program that is saleable, that people will still find attractive, that is attainable to them, but one that you can measure the risk against on the back end. And we always start with a risk-first approach. So we want to understand those passage rates and average payout amounts based upon what that risk profile presents and sort of work backwards to creating a go-to-market strategy. And so we might be more conservative than most, but we've also taken the approach of, everyone that makes money in a funded account should get paid. There should be no denials. There should be no rejections of any kind. And so starting with that, we've definitely enhanced rules or make recommendations to the firms that we work with to address some of the challenges and the new gamification in ways that firms or I should say traders are taking advantage of prop firms without actually adhering to the spirit of the program itself and just trying to address that.
Marek, in line with all of this, how is FTMO balancing A book and B book and implementing components of smart hedging as part of your process?
If I can just touch the previous question a little bit. We're here for 10 years, but we didn't change the product, kinda, right? We still have two-step evaluation with same rules as the beginning. Sometimes we see new inventions, which in my eyes, in my head as a trader, doesn't actually make sense. And we more focus on us and on the product. We have to make it even better and better. So it's, all the experience you actually enjoy, not just the trading conditions, but also the KYC, also the payout process, the trading apps, the education around. It's all should be considered as a trading experience. So I just wanted to add this, sorry for that. And if we touch the topic of A book and B book and risk management, I think important to mention here is that the business model is different than usual brokerage business model, right? We are not accepting and transmitting orders. It's simulated trading data, which we are taking, and from this, then we are taking our trading actions. So I don't even know whether we can call it A book or B book, but important, what I wanted to emphasize is that everything around this area is heavily data-driven, And without the data and technology, I think that it's kind of impossible to run the business. And this goes to my previous answers that it's not just about marketing. You need to really have the technology and people behind so you are able to operate the business model successfully for the long term, right?
So Justin, you spend a lot of time talking about this with your clients and advising them how to approach this. I mean, what could you share with the audience about the importance of all of this in smart hedging?
I think Marek described it perfectly. What started years ago, and maybe not inside of FTMO, but with a lot of firms, was you had your funded accounts and you had your A-book routes and your B-book routes, and you did your best to sort of evaluate risk based on a trader's risk profile and their trading habits and maybe what history you had, and say, well, I'm going to send this one down the A-book channel or the B-book channel. Our evolution has been that doing it on a trader-by-trader basis is not efficient. And so we've looked to probably a similar approach in the back end to what Marek's describing, where we're consuming all of that data and all of the trade activity, and then we make hedging decisions ourselves based upon what the corpus of all of that trade activity is and the net positions are. And that is a much more cost-effective way, and it's a much more holistic way of understanding what your net open position risk is and what the current volatility of the market is, and adjusting accordingly. And so, while we might be 5 years old as a tech company, for the last 3 years we've really been focusing very heavily on the risk management side and developing a lot of automated tools and solutions and hedging apparati to deal with this type of stuff and consume that data in real time and then put it to use.
I would imagine you would be very active in that as well. And
yeah, absolutely. So I completely agree that going on an account per account or a person by person basis, it's not sustainable. Each company has probably an internal way of hedging or not hedging. That's understandable depending on the audience, target, etc. But at the end of the day, we are all aligned. We have also created our own internal tools for dashboards, checking things, exposures, etc. And it's actually, we are spending quite some significant time as well to make sure that the toxic part of the industry, as Justin mentioned in the beginning, because there is some of it, will not have rooms to grow in our company. So data and risk management decisions are crucial nowadays, and we are heavily investing there. Again, all this should have the ultimate impact to the client at the end of the day, that he will get his reward and he will get the best trading experience that he can get.
so that's very valuable information. I think risk management is this really the important message from everything all of you have spoken about. So let's shift gears and talk a little bit about whether prop firms should be preemptively, or maybe how your prop firm is preemptively preparing for potential regulation, and how you see that in the future. Someone else?
Same question every panel. Okay, you can start.
I'll jump in because I think it's a fascinating one, and I was just having this as a sidebar conversation before this panel opened. Normally, financial regulation starts in the US, and then the rest of the world tends to take its cue from there. Right now, between the presidential administration and the fact that you have in the CFTC, which is most likely the regulatory body that would govern this, you have normally 5 commissioners. There's only 2 active right now. They've both indicated their resignations and are on the way out. You have a regulatory body that is essentially being rebuilt in real time. And so, and you have a presidential administration that seems to be somewhat hands-off to financial regulation and no more regulation through enforcement. So it's a very, very unique time from the U.S., which indicates to me that we'll probably see some meaningful regulation actually start somewhere else in the world. And ultimately, I think regulation is a good thing for this space. You have too many people entering from the tech side, too many people entering from the operations side that don't have the wherewithal, they don't have the capital, they don't have the reputation, the integrity, the background to really run a financial service, and that's what this is. So I think ultimately regulation will be a good thing. It will clean it up. It will be good for the operators. It will be good for the end consumer. Where that starts, I can't exactly say, but we've always built our tech to be compliant. I came from the regulated space. We have all sorts of reporting functionality that we could make public or we could submit to a regulator if needed. But I'm in favor of it. I just don't know where it's going to come from.
Do you have any thoughts on where you're seeing this start?
Yeah, it's a topic for several years already here, right? We are discussing when will be the time some regulation will come up and start discussing this business model. I think it's quite difficult because we need to think about it that we are not actually working with client funds and so on. The main job for regulatory body is to protect the client and his funds, right? So I believe that for this one it might be difficult to actually take it. But I absolutely agree with Justin that, it might help because the entry barrier for new entrants would be much higher and much difficult, and only proper companies with, proper funds and so on would enter the market, which would be actually beneficial for everybody, for the industry itself. I believe if it comes one day, we'll be the one who is the most compliant with our team and steps we are taking. I believe it's, if it's coming, let's do it, because I think it's a good thing for the industry. And so I think it's a matter of time, but let's see, maybe more information next year on the same panel.
Do you have any thoughts to share?
I mean, it's a conclusion, but practically everybody's waiting for it. Nobody knows when and how. Yes, we have the U.S. side of the world that, and I agree with Justin. In the European side, as Marek said, the basis of the regulation is that you're protecting the consumer and his the risk that he's taking with his own funds. Here, he doesn't use his own funds, so that's I think a bigger question for those who are responsible for regulating the space. At the end of the day, though, on a day-to-day basis, at least in our company, we are doing things that are in the level of regulated brokers. So there is a KYC, we're dealing with data, so we are complying with the GDPR, so we are constantly waiting that something will come. We don't know how, but we are ready for it. And I think it will definitely put, at least a path. So people will not be able to come and think it's a walk in the park here. So it will be helpful. Actually.
So it does sound like all of your firms are preemptively preparing for regulation, which is certainly a smart thing to do. We also see a lot of brokers entering the prop space and also prop firms acquiring brokers. And so maybe Marek is the first one that can answer this question. Do you see this as an ongoing trend? And how do you see this changing the space?
Well, I hope so, right?
For those who don't know, FTO, you can share the...
It's public.
Yes.
It's public that we are in the middle of acquisition of Wanda, which is Forex brokerage with maybe more than 30 years of history. Definitely, I would say a big thing. Definitely for me and Otakar, but I believe that maybe even for all the industry, because it's a big step, and I think it's a testament that what we are doing, we mean seriously, and we are here for long term. Our long-term vision is to make some kind of a trading powerhouse. So this acquisition absolutely makes sense in our group. And it's actually, continuation of the previous question. For sure, we are getting ready for it. We are doing the business from the beginning. So because we started Mini Otakar as a traders of one prop firm, and we are still thinking about it, how to make the product to the traders. So Marek and Ota would be happy about it those 10 years ago. And with this approach and our long-term vision, we need to take it seriously, as guys discussed a few seconds ago. And I think that this is the only step to be more professional and get ready for the future. And I would advise this to every new participants in the market, that what we are doing here is something serious. And the thing about brokerages and prop firms, it's evident. I think it's a trend for past years, right? And we are part of it from the other perspective. Quite more usual is when broker is opening up his prop firm. So we'll see where it goes.
So Justin, earlier you talked about how credibility is so important, and that's why some of these broker models are so attractive to users. How do you see that affecting the competitiveness of other or new entrants in the prop space or other prop firms?
I have been a long believer that that brokers will make the best prop firms ultimately. They're already familiar with operating financial services in a regulated capacity. They have a lot of the infrastructure that a standalone prop firm would have to go out and pay for in terms of platforms, liquidity, marketing, database of users to go out to, credibility, and so on. And so looking at the prop landscape, it can borrow from a regulated broker's infrastructure very, very well, very seamlessly. And the broker can save a tremendous amount of money just by trying to remonetize and remarket to its existing dead, dormant, and demo lead base. It can re-engage its affiliate and IB networks. It can trade off of its credibility. When regulation for prop comes along, they'll be more adept at adapting to those new regulations. But I think one of the key factors as to why brokers should really be considering the space ultimately is really two things. One, the cost of client acquisition for a prop participant is much cheaper than acquiring a self-funded brokerage account. And that's largely because we've made the process collectively, our firms, let's say, akin to buying a t-shirt online. It's a low friction transaction as opposed to opening up a brokerage account, which requires the full client agreement, going through the KYC at the outset, submitting a larger amount of money up front because you don't want to be making regular deposits. And so we've made that process so much easier, and taking away that friction allows more people to get in for smaller amounts of money, and then just continue to repurchase those challenges over time. The other major consideration is that the demographic of prop traders is very similar to what you find inside a brokerage. It's just skewed about 5 years younger. So if you're a brokerage firm that wants to engage the new generations of traders, much the way that Marek read your book probably when he was like 12, based on how old he looks and how long ago it was.
I think I was
14. That's critical. If you're a broker and you're looking to the future of how you're going to sustain and continue to grow your business, you have to engage the newest generations of traders. And prop is capturing more of their attention than self-funded brokerage accounts.
And do you share that view as well?
Yes, as we discussed in the beginning, diversification is actually something really good. I believe that to an extent, the clients of the prop space should feel a little bit, or do feel a little bit more safe and some safety when you have a regulated broker above you. And to your last question, by doing that, you are actually putting yourself on the path of regulation, right? So, yeah, I do agree on everything.
I think we could spend an hour talking to these three gentlemen here, but we do not have that time. So I like to quickly open up the floor. Any questions that you may have? I believe they'll be available for some questions afterwards. But are there any questions here? Yes.
You many times all relation this kind of toxic play in kids. So you many times mentioned some toxic traders or toxic trading activity. How you define what is toxic in your understanding? How do traders behave that they become toxic for the prop firm?
I'll take the lead, and then you guys are free to jump in. The question was, how do you define what a toxic trader is? Really, it should be black and white. It should be what the actual terms and conditions or terms of service of your program are. Those will vary from firm to firm, and each firm is free to define that how they will. I think some of the general sort of rules of thumb would be not copy trading from third-party signal providers, not engaging in sort of latency arbitrage, not trading in concert with other traders, things that where the prop firm originally was intended to evaluate an individual trader's skill. And if you're demonstrating that you're not the individual that's actually doing the trading, that's sort of the hallmark of what a toxic trader is.
Any other questions? Okay, so I think our time, yes, is there one? Yes.
Yeah, you mentioned also about prop firms coming and going. What's the best way from a trader's point of view to differentiate the props that will last from the ones that won't?
So the question here was, this, we spoke about how prop firms are coming and going. What's the way to differentiate a prop firm that's here to stay?
I don't think FTMO is going anywhere. So that'd be a good place to start.
If I can take this one, thank you. I think that it's not just about the website and your ad on Facebook or Instagram. I think you should do proper due diligence of the provider, whether it actually makes sense to already challenge with him or not. I would definitely check the history. Just to let you know, we're about to celebrate 10 years anniversary, so maybe FTMO would be a good choice. Another thing definitely is online reviews, right? Thank God for the technologies and modern world of online. You have so many reviews and testimonials of people around the world. So definitely I would be looking for these and not just for the marketing materials and so on.
All right. Thank you so much for joining me at the session. All of you, we run out of time. I want to thank you, Marek, Justin, Petros, for all of their insights in the prop trading industry. And as I said, I wish we had an hour to talk to them because there's so much more information we could all learn. But thank you all for joining us today.